Hey everyone, welcome back to Corporate Decoder. Today, Exchange Traded Concepts Trust just filed its annual shareholder report, and I'm seeing some important performance data from the past year. Quick note, this is not financial advice, just my take on public filings for educational purposes. This fund saw solid gains, but it had a rocky start early on. Alright, let's dive into what this report for the CORE16 Best of Breed Premier Index ETF is telling us. This is essentially a report card for the fund over its last fiscal year, which ended on the 30th of April, 2026. First off, let's talk about costs. For a hypothetical $10,000 investment, the fees paid over this period were $74. This works out to 0.70% of the investment. It is important to note that the fund only started operations on May 2025, so if it had been around for a full year, these costs would have been higher. Now for the performance, and this is where things get interesting, the goal of this fund is to match the total return of the CORE16 Best of Breed Premier Index. For the period ending the 30th of April 2026, the fund did quite well, returning 23.49%. For comparison, the S&P 500 index, which is a broader market benchmark, gained 22.73%. So, the fund actually beat its benchmark. However, the report mentions that the fund's strategy, which is an equal weighted approach with 50 stocks, initially struggled. This was because the market was heavily influenced by a few big technology companies, often called the Magnificent Seven. But as the market leadership broadened in early 2026, the fund bounced back and ended up outperforming. They specifically point to semiconductor stocks as a key driver during an April rebound. On an individual stock level, some investments really shined. For example, Intel saw a massive 163% gain over the time it was held. WBD, likely Warner Bros. Discovery jumped 122%, and SNDK, SanDisk, was up 120%. On the flip side, there were some significant laggards. Which is Coinbase dropped 44%, and Hood, which is Robinhood Markets, fell 37%. These big swings highlight the risk involved in specific stock picks, even within an index fund. Looking at the cumulative total returns as of the 30th of April 2026 for a $10,000 investment, the CORE16 Best of Breed Premier Index ETF returned 23.49%. The S&P 500 index, on the other hand, returned 22.73%. This illustrates the fund's ability to slightly outperform a major market index over this period. Let's trace the hypothetical $10,000 investment month by month. It started at $10,000 in May 2025. By June, it had grown to $10,052 for the fund, while the S&P 500 had reached $10,461. So, right from the start, the S&P 500 was ahead. By September 2025, the fund's investment was worth $10,702, and the S&P 500 was at $11,311. The gap widened by December 2025, with the fund at $10,705 and the S&P 500 at $11,611. There was a dip by March 2026, with the fund's value at $10,589 and the S&P 500 at $11,108. But then came the strong recovery. By April 2026, the fund had surged to $12,349, while the S&P 500 reached $12,273. This shows that although the fund lagged for a good portion of its initial operating period, it closed strong. As of the 30th of April 2026, the total net assets of the fund were $1,789,126. The number of holdings was 51. The total advisory fees paid amounted to $10,988. A key metric here is the portfolio turnover rate, which was a very high 245%. This means the fund bought and sold a significant portion of its holdings during the year, which can incur higher trading costs and potentially impact performance through trading inefficiencies. For context, a turnover rate of 100% means the entire portfolio was essentially replaced once within the year. A rate of 245% is quite aggressive. Looking at how the fund is invested, the sector weightings tell a story. Information technology makes up the largest portion at 36.8%, followed by industrials at 29.0%, materials account for 9.8%, and then there is a significant chunk in exchange traded funds at 9.4%, which is likely a money market fund given the description of holdings. Utilities are at 4.2%, communication services at 3.5%, energy at 3.3%, consumer staples at 2.5%, and consumer discretionary at 1.2%. This shows a strong tilt towards technology and industrial sectors. In terms of the top 10 holdings, the State Street Spider Bloomberg 1 to 3 month T-bill ETF is the largest at 9.4%. This is the money market holding. Among individual stocks, Intel is at 3.4%, Lam Research at 2.8%, CH Robinson Worldwide at 2.7%, Quanta Services at 2.6%, Teradyne at 2.6%. Monolithic Power Systems at 2.5%, SanDisk at 2.5%, TLA at 2.4%, and Advanced Micro Devices at 2.4%. These are mostly technology and industrials companies aligning with the sector breakdown. Diving into the actual schedule of investments, we see the breakdown of these holdings. For example, under Communication Services, Alphabet Class A is listed with 109 shares valued at $41,943. In Consumer Staples, Dollar Tree has 205 shares worth $19,908. Under Energy, Camco is listed with 287 shares valued at $35,313. In Industrials, we see Boeing with 96 shares valued at $21,987 and Caterpillar with 45 shares at $40,055. The Information Technology section is quite extensive. Advanced Micro Devices has 121 shares valued at $42,893. Apple has 110 shares valued at $29,848. And of course, Nevada Edia is listed with 146 shares valued at $29,137. Intel, which was mentioned as a strong performer, has 639 shares valued at $60,373. In the materials sector, Albemarle has 181 shares valued at $35,603. Dow has 804 shares valued at $32,554. And for utilities, AES has 1,627 shares valued at $23,510. The total common stock holdings amount to 90.3% of the portfolio, with a cost of $1,410,740. The total exchange-traded fund portion, which is the money market fund, is 9.4% with a cost of $168,633. Overall, the total investments are 99.7% of the portfolio, with a total cost of $1,579,373 and a fair value of $1,783,098. Moving to the statement of assets and liabilities as of the 30th of April 2026, the investments at fair value are listed as $1,783,098. Cash and cash equivalents are $6,865. Total assets are $1,790,095. Liabilities, mainly advisory fees payable, are $969. This leaves total net assets at $1,789,126. The net asset value per S-share at the end of the period was $29.82. The statement of operations details the fund's income and expenses. Dividend income was $18,246 and interest income was $184, totaling $18,419 in investment income. Expenses, primarily advisory fees, were $10,988. This resulted in net investment income of $7,431. The fund also saw significant gains. Net realized gain on investments was $150,078. The net change in unrealized appreciation was $203,725. Combining these, the net realized and unrealized gain was $353,803. This led to a net increase in net assets from operations of $361,234. Looking at the statement of changes in net assets, the net increase from operations was $361,234. There were distributions totaling $25,700. The big story here is the capital share transactions. The fund issued shares worth $7,067,838 and redeemed shares worth $5,646. This resulted in an increase of $1,453,592 from these transactions. The total increase in net assets for the period was $1,789,126. The financial highlight section provides a per share view. The net asset value per S-share at the beginning of the period was $24.94. The total return from investment activities was $5.74 per S-share, after distributions of $0.86 per S-share. The net asset value at the end of the period rose to $29.82. The total return for the period was 23.49%, which matches what we saw earlier. The expense ratio is 0.70%. Again, the portfolio turnover rate is highlighted at 245%. This is quite a high number and suggests active management or rebalancing strategy within the fund. Digging into the notes, we learned that this fund, Colorado Re16 Best of Breed Premier Index ETF, is part of the Exchange Traded Concepts Trust. It aims to track the CORE16 Best of Breed Premier Index. The investment advisor is Exchange Traded Concepts LLC. Importantly, the fund is classified as non-diversified under the 1940 Act. This means it can invest a larger portion of its assets in a smaller number of issuers compared to a diversified fund, which can lead to higher volatility. The fund commenced operations on May 2025, so this report covers its initial period. The fund values its investments at fair value, which is standard practice. They use quoted prices from active markets, or if those aren't available, they use other valuation techniques. The report mentions that as of the 30th of April 2026, all of the fund's investments were considered level 1, meaning they were valued using unadjusted quoted prices in active markets for identical assets. This is the most reliable type of valuation. Under service providers, we see that Exchange Traded Concepts LLC is the investment advisor, charging a fee of 0.70% of average daily net assets. The report also mentions that the sponsor of the index, CORE16 Inc., has an arrangement with the advisor and helps cover fund expenses. Distribution services are handled by Psy Investments Distribution Company. Interestingly, the report states that for the period ended the 30th of April 2026, no fees were charged by the distributor under a potential Rule 12B-1 plan, suggesting this plan was not active or required during this initial period. In terms of investment transactions excluding in-kind creations and redemptions, the fund had purchases of securities totaling $4,505,085 and sales of $4,498,861 for the period. The in-kind transactions associated with creations and redemptions were much larger, with purchases at $7,033,242 and sales at $5,610,171, resulting in a realized gain of $132,099. The tax information section details the character of distributions. For the fiscal year ended the 30th of April 2026, 100% of distributions were ordinary income based on the report. Notably, 45.19% of these ordinary income distributions qualified for the corporate dividend received deduction, and 34.22% qualified as dividend income. There were no long-term capital gain distributions. The report also shows that for federal income tax purposes, the cost of securities differs from the financial reporting cost, primarily due to wash sales rules. Now let's touch on the risks which are crucial to understand. The fund is subject to authorized participant concentration risk, meaning a limited number of institutions facilitate creations and redemptions, which could impact trading prices if they pull back. Market risk is always present, meaning the value of securities can fall due to economic or political factors. Because it is a non-diversified fund, it faces non-diversification risk, where the performance of a few issuers can significantly impact the fund's overall performance. They also highlight sector focus risk, specifically mentioning industrial sector risk and information technology sector risk, noting that the fund can be susceptible to downturns in these specific industries. Finally, we have the report of independent registered public accounting firm. Cohen & Company Limited audited the financial statements and gave an unqualified opinion, meaning they found the financial statements to be fairly presented in all material respects. They mentioned serving investment companies advised by Exchange Traded Concepts LLC since 2012, so wrapping up, this fund had a strong performance in its first year, managing to outperform the S&P 500 despite a challenging start. The high portfolio turnover and non-diversified nature are key characteristics to watch. The heavy exposure to technology and industrial sectors means that performance will be closely tied to these areas. The risk I am watching is how the high portfolio turnover rate impacts expense ratios over time, and whether the non-diversified nature leads to significant volatility if any of the top holdings falter. What I am actually looking for is whether the fund can maintain this outperformance in its second year, especially if market leadership shifts again. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more. Hit the Discord link for community.